For new stock investors, watching, listening, or reading analysis online can be daunting. I remember when I was new to investing, I didn't know half of the terms that people were saying. But constantly watching and reading about those topics with my conversations with EJ, since I would ask him, and in dealing with investors for our startup, I learned all these terms that were being used. Knowing these terms used in stock investing turned me into a more intelligent investor. So for today's episode, we'd love to share with you some of the basic stock market trading and investing terms that you should know. But before that, I'm Ginger Arboleda.
And I'm EJ.
And we're content creators and startup business owners who love sharing our experience on personal finance, investing, business, and parenthood. And for today's video, our sponsor is GoTrade. When you're a beginning investor, it's best to use a trading platform that is easy to use. We've been using GoTrade to buy US and foreign stocks. As you may know, we're not from the US, so it's been a challenge finding a platform that suits our needs. We found GoTrade and all of our US and foreign stock investments are with them. To sign up, just go to the link below. For full disclosure, we are affiliates of GoTrade. Now, back to our topic.
The first term that you need to know is stock market investing. There are publicly listed companies which are listed in various stock markets. Anyone in the public can basically invest by buying equity or shares of that company. When you have shares, you actually own a portion of that company. Publicly listed companies are heavily regulated, and those regulations ensure that you, as the normal average Joe investor, have the information you need to make wise investment decisions.
The next term is broker. To purchase shares of a company, you will need to have a broker. There are full-service brokers that give you a full range of traditional brokerage services with financial advice on anything that has to do with money. This is usually offered to higher net worth individuals with large fund sizes of at least $25,000. There are also discount brokers, which is what we use. So discount online brokers give you tools to select and place your own transactions. For example, GoTrade. GoTrade offers an online brokerage service with their app. The new apps now have what we call a Robo-advisory service. So this Robo-advisory service uses algorithms to give financial advice.
Alright, the next term is buy or sell. The most common way to earn from stock market investing is through the gains made when your stock increases in price. Thus, you might have heard the phrase, buy low, sell high. A buy is basically buying shares of a company. You usually buy when you think that the price of a stock will go up and that the price is low now relative to the future. A sell is exactly what you think, basically selling the shares you currently own. When you're able to sell at a higher price than what you bought, then you make a profit. Now, it's important to remember that some platforms charge fees for trades, so make sure you consider that in your buy and sell decisions.
The next term is shares. A share represents some ownership of a company. Different companies have different number of publicly available shares.
Next term, the average cost. Average cost is the average price of what you paid for all of your shares. This is especially useful for people who make multiple buys over time. The average cost should be what you consider as the price you bought at. Computing it is simple. Basically, you add up all the money you spent divided by all the stocks you bought. So for example, last month you bought 100 shares for 500 pesos. This month you bought 200 shares for 500 pesos. The average cost would be 300 shares divided by 1,000 pesos or 30 cents per share. So if you're selling, make sure you're selling at least above that. And as I said, make sure that you consider the fees if there are any.
The next term is market cap. So market capitalization, aka market cap, is the total value of all of the company's shares. For example, if a company has 1 million shares outstanding and the stock price is $10 per share, the market cap is $10 million. Among other things, companies with higher market cap are considered less risky versus companies in the same industry with lower market caps. flip side, companies with lower market caps have higher potential for growth versus another company in the same industry with higher market caps.
Next term, earnings per share. This is the net annual profit generated by the company per share. To get this, you get the earnings of the company over the last 12 months and divide it by the previous day's close price. Related to that is the next term, the price to earnings ratio. Let's say the company's earnings per share is equal to the price. Then that's a 1:1 price to earnings ratio. If the price is cheaper than the earnings, then the company is undervalued. Normally, fundamental investors see that as a good deal. If the price is more expensive than the earnings, then the company is considered overvalued. Now, it's important to note that this indicator also shows what the market thinks the company is really worth. In other words, when a stock is overvalued, that may indicate that the market expects this stock to rise in value in the future. If it's undervalued, it may be a good deal now, but that may also mean that the market expects the returns to dip soon, so they're getting out.
The next term is dividend yield. There are a lot of dividend investors, and this means that these investors look for the companies that have high dividend returns. A dividend is the total income an investor receives from a stock or another dividend-yielding asset during the year. To compute the dividend yield, you get the annual dividends paid per share and divide that by the price per share. So let's say the dividend paid per share is $4 and the price per share is $100. That's a dividend yield of 0.04 or 4%. Personally, I'm more of a dividend investor. I usually look for those stocks with a dividend yield higher than 4% and a stable company that has been issuing dividends consistently for the past few years. In my mind, it's an annual rate of return of 4%, so it's easier for me to compute how much my investments are getting to me.
Next, the average daily trading volume. The average daily trading volume, or average volume, is the average number of shares of the stock that trades each day. You get the average volume traded for the past 30 days. A high average volume indicates that there's a lot of interest in investing in this stock. If you're a day trader, that's something you look for because you normally want to sell quickly once you reach your expected return.
These are just some of the terms that you may come across when you start investing in stocks. If there are other terms that you'd like us to explain, feel free to comment down below so that we can explain it to you in the next video.
If you like this video, please press that like button, share this with your friends, and click on that notification bell so you get notified when we release more videos like this. Till next time!